Hello, good morning. It's the 20th of July. I'm Joe Neighbour from Signal Centre, and today, again, we'll be running through the latest updates on financial markets, looking at the headlines that's moving markets, and also then taking a dive into the charts to see what price action is doing for this Wednesday. So, first of all, going to go through the latest headlines. I'll bring those up on the screen now. In terms of the ECB, the bets have been scaled up. Sources report that the ECB was considering a rate hike of 25 basis points or 50 basis points at this week's policy meeting. Markets had priced in around 30 basis points of tightening, and the increased possibility of a larger rate hike triggered fresh euro buying. Money markets are also have moved slightly to price in 100 basis point tightening by September this year. There are also reports that ECB President Christine Lagarde was redoubling the push to get a deal done this week on the ECB peripheral bond tool. In terms of what's going on in the energy markets, the Nord Stream reopening hopes have triggered some relief in markets. They are continuing to monitor the situation surrounding the Nord Stream gas pipeline, although there remains a high degree of uncertainty. The latest source reports suggest that gas flows will resume on Thursday at reduced levels. Any resumption of supplies would definitely provide an element of relief to the energy markets. Italian politics continues to be closely watched. The political developments there will be again watched today, with Prime Minister Draghi scheduling to outline his plans in the Senate and announcing whether he will continue in office. This is after he tendered his resignation last week. In terms of what's going on with risk appetite in general, as a result of the resumption of the gas flows through the Nord Stream pipeline, that has limited immediate fears surrounding the German economy and helped underpin risk appetite, with markets also hoping that a peak in pessimism has been seen in global markets. And we'll come on to the charts in a moment to see whether or not that's being filtered through into the price action. US housing sector slowed. We saw housing starts decline to an annual rate of 1.56 million for June from a revised number of 1.59 million previously. However, this was slightly below the consensus forecast. In terms of the Royal Bank of Australia, the Reserve Bank of Australia, the Governor Lowe stated that inflation could increase to around 7% and that the central bank will have to increase interest rates further, with the assumption that rates will have to rise to at least 2.5%. Bank of England Governor Bailey spoke yesterday. He stated that there was some evidence that the supply chain issues were starting to ease and that the economy is slowing. Nevertheless, he reiterated inflation concerns and stated that a 50 basis point rate hike would be on the table at the August meeting. He did, however, insist that a 50 basis point rate hike was not locked in and that the committee will deliberate over the decision. This morning, we had some fresh data out from the UK, and inflation peaked at a fresh 40-year high. The headline CPI number increased to 9.4% from 9.1%, which was slightly above the consensus forecast of 9.3%. And again, the highest reading that we've seen for over 40 years. The underlying rate edged lower to 5.8% from 5.9%, which was pretty much in line with expectations. So let's take a look at some of the charts and what's going on the price action side of things, starting off with FX as usual. And first up, we're taking a look at the dollar index. Now, this continues to be in corrective mode, having slammed into resistance at 108.74. So as things stand, we're posting 4 negative sessions. Obviously, a long way to go in today's session before we can confirm that is the case. But it looks as though prices are retreating and we're heading towards support at 105.78. So here we have a previous swing high, which obviously we saw a breakout here on the 5th of July. So we're looking for a retest of that. That will also come pretty much in line with this short-term bullish channel. So we'll wait and see what sort of reaction we get there, whether or not the dollar bulls are going to continue to push prices higher. Overall, the trend still remains very strong indeed. So it wouldn't be a surprise if we did get some buying interest around this level. If we see a break of the channel, then that could trigger a further corrective move. And maybe what we'll be in the process of doing is forming some sort of top on the dollar index. Very early call on that. highly speculative at this stage. Overall, the trend still remains bullish, as I said. So we'll wait and see what sort of reaction we get if and when we get down to that 105.78 level. So how's that affecting other currencies? Well, let's take a look at euro US dollar, and that's very much on the front foot at the moment. Four consecutive green candles that we can see there. Not confirmed, obviously, the fourth as of yet, but we're fast approaching resistance at 103.48. So euro being helped by a number of factors. Obviously, the pipeline, the gas pipeline, is helping. Obviously, talk of interest rates hiked. Being hiked as well in the euro, and that's all helping push prices higher. Probably an element of short covering in this as well, I would have thought, given that it's obviously been a heavily shorted asset for a number of months now. Overall, the trend does still remain bearish, so we're not seeing any sort of wholesale changes in the dominant trend here, but there is scope for a decent correction into this zone here. And once we get there, we'll have to wait and see what sort of reaction we get as to whether or not the bulls are going to drive things higher, or whether the the bears are going to step back in and take this lower in line with the dominant trend. Taking a quick look at cable, not really as exciting as what we're seeing at the moment on euro US dollar in terms of price structure and setup. We are trading in a bit of a wedge as things stand at the minute. We are above that at the moment, according to the drawing that I've got on the chart here, but we aren't really accelerating away as you would expect to the upside. So still underperforming by the looks of things for now. Probably, hindered by this inflation number that we saw earlier today in terms of, and talk about rate expectations as well from Bailey yesterday. So four consecutive green candles at the moment, but we need to see a little bit more on this. I think we need to see a fairly decisive breakout of this wedge pattern for us to expect to see a correction higher on cable in the very short term. Taking a look at some of the other currencies, we saw Aussie come to the party a bit over the last few sessions or so. Potential bottoming price action taking place here on Aussie CAD. Take a look at Aussie Swiss. That's into some key resistance here. Potential bottoming formation here as well. Needs to get above 67.02, and if we can do that, then arguably we are going to see a decent correction into this white space that we have above. Aussie yen looking really strong still following the breakout of this triangle pattern. It really hasn't looked back since, and still looking to press higher. So a test of the previous highs up at 96.88 cannot be ruled out in the short term. Taking a look at Aussie US dollar, decent breakout from a wedge here, an ending wedge formation that came pretty much in line with the long-term 50% fib level. So again, potential there for a decent correction to the upside. Let's just take a look and see if we've got any uh, trend levels here. So we've got a couple of previous highs here to potentially target. We may see some reaction into that level there. If that breaks, then again, plenty of white space for this to move into on the upside. And again, that would be triggered by further dollar weakness. So we need to see what happens with that. Okay, let's take a look at some of the other US dollar currencies. So dollar CAD, really strong reversal after what looked to be a pretty strong breakout on the 14th of July. Prices couldn't hold above that, and we've seen them reverse quite aggressively, really, and look to be potentially heading lower. Overall, I'd say likely that we're going to trade within this range for the time being. So do be careful of that. If we take out these lows here, that are posted at 128.19, then that could trigger a move back down to the lower end of the range. Yen still remains persistently weak despite the weakness that we're seeing in the US dollar. The yen is even weaker than that, and that continues to keep dollar yen trading at elevated levels. We're just shy of this 140 level, which isn't really a technical level as such, more just a psychological level, a big round number for us to potentially target in the short term. And prices are stabilizing pretty close to that level. So any sort of dollar strength coupled with that yen weakness that we continue to see is likely to take the price towards that level. Moving on to cryptocurrencies, and Bitcoin had a really good day yesterday. Been talking about this triangle pattern now for a good few sessions, and finally we saw a pretty decisive breakout. So the real breakout came on the 18th, and we've seen prices continue to move higher. Those who watched yesterday's video will note that we saw, while we were doing this video, a pullback to this new support level at 21,800, and it did a pretty good job, as you can see. We only mildly overshot that level, and then the buyers stepped back in to drive prices higher. We've got a measured move target on this bottom pattern, so measuring from the low of this triangle to the upper end and projecting that higher. that comes in at 26,137. So that's the one of the levels that we're looking for on the upside. The other one, if we just remove this green band, just to give you an idea, is this low here. So this reaction low and reversal that we posted on the 12th of May, we've just got a candle wick hanging out there by itself in the middle of nowhere. So expect that to do potentially a job as resistance as well. So that is the short-term area to target, and also pretty much lines up with this downtrend line as well. If we can get above that level, then we'll be targeting a move to the 161.8% extension of this triangle move and the underside of this cluster of price action here, which comes in at 28,742. So looking a little bit better on the Bitcoin situation. Overall, though, we do have to bear in mind that there is a large top pattern in place. So as we highlighted yesterday, we've got this kind of head and shoulders top potentially on the daily chart. If we take a look at the weekly chart, just to consolidate this a little bit, we've got a pretty strong double top looking formation there. So any reaction higher could come up against some pretty stiff resistance here at the underside of all of this price action that goes back to January 2021. But for now, look pretty good. So if you're speculating on Bitcoin, or if you have been underwater on Bitcoin throughout this period, then hopefully you're getting a bit of relief from this move. But do be wary of this big figure here, because that could be a potential point for you to consider exiting to limit the damage that Bitcoin's done over the last few months. Moving on to Ethereum, let's get back onto the dailies. This has been outperforming actually compared to Bitcoin. Nice breakout from the triangle pattern here, as you can see on the 16th of July, and prices have continued to accelerate higher. Our measured move target in this instance is at 1682. If we take a look at these lows here, we've got a couple of lows that line up nicely to give us, well, really that marries up with the measured move. So that would be a really interesting area to target around 1700. Above that, looking for potentially 1930. And again, it may just be a case of limiting damage. If you've been short in this period, long in this period here, you may want to consider offloading some of this position and maybe reassessing and looking for a better entry if you are trying to position yourself for the long term. Okay, let's look at commodities now. So oil rallied pretty well over the last few sessions. This big reversal candle that we posted on the 14th of July saw prices then extend higher. We now are facing resistance around 104.61. Obviously, the gas pipeline reopening may have an impact on oil and ease the demand situation there by increasing supply. So that could have an impact on other energy markets as well. We take a look at WTI, we've got the potential for a large double top formation here on the daily chart. Really strong reversal again on the 14th of July. Bit of a fake out there, really. So I'm sure there were a few speculators that were banking on that being a double top and breaking and confirming that. But the close was back above the major support. So we saw prices continue to move higher. A couple of resistance levels above to consider. 103 for me really is the level. That would mean we take out this short-term downtrend and form some sort of short-term bottom, which could lead to a continuation higher in the price of oil in the short term. Looking at gold, still not much going on here. I kind of said yesterday, really boring stuff. Lots of sort of doges and indecision forming at the minute. We aren't really at any kind of major support level as things stand at the minute. So this really is a pretty awful market as things stand. You would expect this to have moved higher given that we've seen the weakness in the US dollar, but it hasn't happened. So if you are a gold bug and gold's your favorite market, you may want to consider looking at something else, because it's just really not happening here at the minute. Similar situation for silver. We've seen prices decline pretty steadily. We have seen some evidence of support around the 61.8% fib level, although it has overshot it. But again, no real evidence of the buyers stepping back in to take this higher, despite the weakness that we've seen in the price of the US dollar. So not my favorite market at the moment, these precious metals. Let's take it on to the indices. Really decent day for some of the indices yesterday. Let's start off with the DAX. So this is the German market, and obviously this has been helped by news of the gas pipeline coming back online potentially, although not confirmed, and also potentially with the decisive action, or still indecisive at the moment, but the action that the ECB are considering to take with regards to interest rates. So yesterday we saw a really strong green candle breaking up through this resistance at 13,022, to maybe form some sort of short-term bottom, maybe a double bottom potentially. We've suggested this double bottom here, taking the measurement from the low to the high, projected that higher. That comes in at 13,663 today. And we've got some extension to those levels that go all the way up to this major resistance level up here between sort of 14,694 to 14,810. But as things stand, as you can see, this level of support at 12,431 is doing a pretty decent job. So maybe what we're going to see here actually is more range bound price action in the DAX, which is going to mean difficult conditions. But if you can time your entries right, and play within the range, selling at the top end of the range, buying at the bottom, then potentially there is some decent trading opportunities in that in the short term. Looking at the Nasdaq, so again, we've been talking about these triangle patterns. We saw it with Bitcoin. We saw a decent break to the upside emerge. With Nasdaq, we've seen a break as well. So we engulfed all of yesterday's, the day before's losses. So that'll be Monday's losses. So Tuesday saw a decent break up. We've taken out this resistance at 12,225, and we've closed above it. In terms of today's price action, on the initial side of things, we've got small bit of indecision as things stand, obviously very early in the day, but there is some potential here, I think, for some sort of bottoming pattern to potentially take shape here, maybe a cup and handle formation there on the Nasdaq, which would provide some temporary relief in this particular market. If we're going to talk about this as a cup and handle, then the neckline of that pattern comes in at 12,941. So we need to see that level get a good testing and potentially get taken out at some point. I was actually looking at the Nasdaq as well, just in terms of the weekly chart, just to try and put things into a little bit of perspective. So obviously, over recent weeks, we've seen a really large top pattern form on the charts here. So this goes back down to the pandemic lows in March 2020. Really large rounded top, arguably a head and shoulders. We've seen a breakdown. We've seen the 50% fib level do a reasonable job at providing some support. But now maybe what we're going to see is a retest of this neckline of this large top pattern. So if you are a bull, you need to be aware of this level, because if it can't get above that, then we may be set for another wave of selling and a move to the downside. So we've got 61.8% fib level in our sights at 10,500. And then below that, it starts to look quite murky down towards 78.6, which would be, quite painful, I'm sure. But the one thing that interested me most about this actually was the fixed range volume profile. So this is just an indication of where most of the participation in this market has taken place. So what I've done is taken the measurement from the pandemic lows to the highs that we posted in November last year, and want to see where has most of the transactions taken place in this market. Where is the average price that this market is owned? And this red line, let me just get rid of this level here. This red line here is the point of control. So this is where most price action, or most transactions have taken place. And these levels can often work as support and resistance levels. So we're approaching a pretty significant level in terms of the neckline of this top pattern, but just above that, we've got the point of control as well. So if you think of what we're going to have to do to try and unwind that, we're going to have to put in a lot of effort from the bulls to try and drive price above that point of control level. So this could act as a really stiff level of resistance. So please do bear that in mind. We are seeing a bit of a rally, but bear market rallies can be quite aggressive and very volatile, and do a very good job at sucking in traders into the market before then we finally see a move back in line with the dominant trend. So need to be bearing that in mind when you're considering taking maybe longer term positions in Nasdaq and any US market really. So let's take a look at the S&P 500, and again, very close to trying completing this kind of triangle pattern. We actually came up just shy of that yesterday on the daily chart. which actually lines up with the slope neckline of this head and shoulders top pattern that we've got on the daily chart. So is this a retest of the neckline? Sometimes these levels can be overshot, and we may see a correction higher. I've got some resistance here to focus on as well at 4,107. So I do think upside is going to be ultimately quite limited, but there's no reason why speculators can't have a little bit of a play on this to the upside in the hope of making a few extra dollars, or maybe unloading some positions that have been a problem throughout this phase here in order to reset your overall portfolios and look for better entry levels. But ultimately, the price action still remains bearish on the longer term setups. So do bear that in mind. This could just be a bear market rally. Looking at the FTSE 100, I don't know why I bother with this too much because it is just stuck in a range. It's not really doing an awful lot. It did have a very good day yesterday, to be fair. Really strong green candle, but and it continues to outperform pretty much all the other benchmarks out there at the moment. Obviously, a very important level of support in this kind of region down at sort of 68.50. But prices are likely just to remain contained within this channel, this range for the time being. So that's that on the indices front. I do actually want to have a quick look at some of the earnings stuff that's going on at the minute, because yesterday we had Netflix numbers out, and obviously the market was watching that with great interest, because it can be a bit of a bellwether certainly for the tech side of things. I was watching Bloomberg News last night, and we saw that the subscriber numbers for Netflix were actually down by 1 million users, which is pretty significant, right? In terms of the numbers themselves, we were expecting an EPS number of $2.97, so it actually came in ahead of that at 3.2, which is good. If we look at the earnings history, we can see that that was pretty much a spot on call by the forecasters there on Netflix. Typically, we do see decent moves to the upside when we get an earnings surprise from Netflix. And I think in the post market, certainly when I was watching in sort of 10, 20 minutes after the earnings release came out, prices were up between sort of 6 to 8%. So we have to wait and see what sort of prices we're looking at come the open later on today or in the pre-market. So if we have a look at what's out today, a few names to keep an eye on, but I guess most notably, Tesla is the one that the retail crowd will be watching. In terms of what we're expecting, we're looking for an EPS number of $1.68. That is lower than what we saw last time at 2.86. Obviously, expectations in general are a lot lower than they were in the last earnings quarter. So this is where we're expecting the price, the EPS to come in at. This comes out after market close today. So after around 9 o'clock UK time. So keep an eye out for that if you are involved in Tesla or looking to take action on Tesla. Do be aware that it's coming out because it could create a lot of volatility. And obviously, if there is a big gap as a result of the earnings in tomorrow's price action, there's not a lot you're going to be able to do between the close tonight and the open on the following day. So do bear that in mind. Okay, let's go to the gun to the head challenge. So this is where usually when I'm joined by my colleagues Jamie and Steve, we will give you 3 trade ideas that we fancy for the trading day ahead. Yesterday, I picked Bitcoin as the idea, and if you want to check these out, you can do so on our TradingView profile. It's signal__ center. This is also where you'll be able to catch our live streams if you're watching elsewhere. So my gun to the head trade yesterday was to buy Bitcoin because I felt that it was bottoming, as I suggested with that triangle pattern that we could see on the daily chart. On the intraday charts, this is a 60-minute chart, I highlighted this bullish channel and a pullback into this support zone here. So if we just click play, that played out pretty nicely, as you can see. So come 9 o'clock when we close these trade ideas off, I was on side 3.8R. I was looking for 6.46 overall. So if anybody did follow that and they're still in it, still looks pretty good to get to that level for me, up to 24,888, which would be a 6.5R return on your trade. So for every $100 you risked, we'd be looking to make $646 in return for that particular setup. Sorry. So I've got to find a new trade today. I haven't given it a lot of thought, so I'm just going to have a quick flick through a few intraday charts and see if anything is looking of interest. So please just bear with me one moment. When I look at these ideas, typically what I'm doing is using hourly charts and looking for crosses above the 10 period exponential moving average. For me, that is a pretty good indication of a switch in momentum and can lead to some pretty nice moves um, on certain assets. So we'll see if this plays out today or if I can find one that ticks those boxes. So moving on to the cryptos, anything there already on their merry way by the looks of things? Anything in oil? Not particularly. Nothing doing in the precious metals as we discussed. Let's have a look and see if there's any potential for a turnaround in uh, some of the indices. Okay, that looks quite interesting. Okay, shall we have a look at this? So this is the Euro Stocks 50. Let me just take a quick look at the DAX actually. No, I'll go Euro Stocks 50. So this is highly speculative. I haven't spent much time on this whatsoever. So let's just take a quick look at the daily first of all. So this kind of goes against what you would typically look at as a technical analyst. So I'm suggesting here with this red line of resistance at 35.91 that we've probably seen a breakout here. We certainly closed above that level yesterday, which will be a pretty bullish indication. But we're on the back foot today by 0.36% as things stand. So either this is a pullback to retest this level, and we're going to see a continuation higher, or we are seeing a false breakout and we're actually going to see prices continue lower. Now, typically, being a technician, I would want to follow the breakout, but in this instance, because the overall trend remains quite bearish, I'm actually going to try and speculate on a false breakout here. So again, highly speculative stuff. And the reason that I'm doing that is due to the fact that we've seen in the last few hours or so a bit of a rounding of price action here, very minor, but also seen a close below this 10 period exponential moving average with a pretty strong reversal candle here that was posted at 6 a.m. So I'm going to speculate on a move lower. And one of the main reasons I like to do this is because the risk reward typically is very good. So I'm calling a top in the market today, suggesting that it's not going to get above these highs that we posted early this morning at 1 a.m. So I'm going to sell the Eurostox 50 at 3595. I'm going to have a stop above the highs that we posted earlier this morning at 3621. And I'm going to look for a decent pullback. So the immediate level that I can see is this high here that was posted on the 18th of July at 1 o'clock. So yesterday we saw some strong price action, a really clean break through that. But what I'd like to see maybe is a retest of that level. And if we just take a look at quick trend line as well, we can see that the short-term uptrend line pretty much lines up with that target as well. So that gives me a 2.31 R risk reward ratio. So for every $100 that I risk, I'm looking to make $231 in return. If we look over to the left-hand side, we can also maybe make out some resistance here. That is the previous high that we spoke about, and this is the minor sort of move to the upside. So we either need to see the bull step in now and drive this higher, or this is going to be a false breakout and we're going to see a correction lower. So I'm going to go with the latter there and try and set up a short trade there on Euro stocks. So I'll get that published to the TradingView profile. If anybody wants to check it out or monitor the progress of it, please feel free to do so. Just check, see if there's anything going on the chat. Nope, we're all good. So day ahead, we've got a few bits to keep an eye out for today. Most notably, in terms of high impact data, at 1:30 UK time, we've got the Canadian consumer prices. So this is the latest read on inflation in Canada. And as we know, the inflation numbers are pretty much dictating what the central banks are doing at the moment with regards to interest rates. So that'll be an interesting one to watch for later on the Canadian side of things. So if you've got any exposure to Canadian dollar, please bear that in mind. At 3 o'clock UK time, we've got US existing home sales. So again, that could be an important number and factor into what it is that the Federal Reserve are likely to do in terms of next steps with the economy. At 3:30 UK time, we've got the US EIA oil inventory data. Again, that will be well watched for anybody involved in the energy markets. And then overnight tonight at 4 a.m. UK time, we've got the Bank of Japan policy decision. So again, if you've got any yen exposure, be aware that at 4 a.m. UK time, you could be in for quite a volatility shock on the back of that. Later on this week, or tomorrow, in fact, we've got the ECB policy meeting. Just to reiterate there is talk of an interest rate hike. Um, Christine Lagarde mentioned that yesterday. They're considering a 25 or a 50 basis point rate hike at the meeting. The market is currently priced in around 30 basis points, so pretty much sitting in the middle of those two numbers. So we'll have to wait and see what happens with that. And then on Friday, we've got European, is it Friday? Yeah, it will be Friday. We've got European and US PMI data due out as well. So that pretty much wraps it up for what we can expect for the week ahead in terms of high impact data. Okay, hopefully that was useful today, taking you through a number of asset classes there. Again, it will be me for the rest of the week, so tomorrow and Friday, and then on Monday we'll welcome Steve back from his holidays and Jamie as well, and then we can give you a bit more in-depth information about other asset classes as well. So until then, guys, trade safe, and I'll be back tomorrow morning. Have a great day. Goodbye.